Hi there, welcome to Kneppy Invest. Trading has just finished for the day. I have to look at the date, the 23rd of November, 2023. Typically, I do these sort of videos after trading has finished on the Friday, but I'm actually working on the Friday, 12-hour shift in the office. Sometimes I'll do the shift at home and be able to record a video during my lunch break, but I've decided to work in the office. So I've decided to record this video one day earlier, which means I miss all the amazing announcements we're going to see on the Friday. However, we have about 2 weeks of announcements to go through in this video. I did exclude quite a few companies. So in the end, we'll be looking at 31 companies. I'll skip past the XJO and focus more on the markets when I do my technical update video on Sunday. So the first company we're going to look at in today's video is ANZ, which is a banking company. For those who don't know, one of the biggest companies in Australia, market cap about $73 billion. This company released their results the other day, about 10 days ago. I believe it was the 13th. I could be mistaken. Yeah, the 13th. I mean, the results looked okay. And I think the market might be slightly concerned about the outlook. Company also went ex-dividend, and that's why there was a big drop on. They went ex-dividend on the 16th of November, final dividend of 94 cents. If we go to the 16th of November, you can actually see the share price dropped. Share price dropped 82 cents, so a little bit less than the dividend. Share price dropped 3.3% on that day. Nothing to really report when it comes to the announcement or the financial state of this company. It's a big company, not really going to be growing all that much, if at all, over the next 5 to 10 years. The only reason you might be holding this company is because of the dividend yield. According to TradingView, the dividend yield of this company is 9.6%, and the price earnings ratio 10.74. The only times I've held the banks, apart from Commonwealth Bank, which was the first company I bought, the only time I've held the banks over the past 14 years is when they have looked pretty good value. And typically I look for a price earnings ratio below 10, and ANZ Group now at 10.74. Interesting enough, when you look at the chart, you can see, technicals work. You can see that the share price of ANZ has really had trouble getting above $26. And this has been going on since October of last year. So over a year, the share price of this company, anytime it hits $26, you sell. And we're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times in the past. You could have sold at $26 and the share price pulls back. But the other thing to notice is when you look at the lows keep rising. So this is some sort of pattern. I forget exactly what this pattern, some sort of wedge or something like that. And I'm pretty sure this is a bullish pattern. And because the selling pressure becomes less and less as you go through time, but when the price gets to $26, we see some selling coming in. And what you usually do in this sort of pattern would be waiting for a breakout above $26. Now, I wouldn't probably play that for ANZ Group simply because I just don't like the growth profile of this company. I don't like the growth profile of any banks. In fact, the Commonwealth Bank said their growth phase has come to an end. They literally said that in the last financial results. The CEO said, this is a more safe, secure company, but we're not going to be growing all that much in the future. And the only reason, again, you'd hold these companies is for the dividend. And to be honest with you, I don't own any companies just for the dividend. I want a little bit of growth. The next company could be having that growth I seek. A company called Light and Wonder, a dual listing company. I'm not sure why this company listed on the ASX. They are also listed on the NASDAQ. Let's have a look. I'm pretty sure it's the NASDAQ. Yeah, the NASDAQ, Light and Wonder. And then for some reason, they decided to list on the ASX in the middle of this year, 1st of June or May of this year. And the share price has gone on a massive rally since they listed. Share price has increased from about $90 to $134.81. So share price has increased by about 50% over that period of time. And one of the things I do for IPOs is I look, and I very rarely, if at all, buy IPOs until they've been at least listed on the ASX for 6 months. I want at least some financial results. And there is a reason behind that. In fact, I'd say the vast majority of IPOs share price goes down after they list. This is one example that the share price has gone up. And this is exactly what I'm looking for with IPOs. And also, I'm also looking for trading updates, profit upgrades. And that's the only reason I would buy a company that has been listed on the ASX for less than 6 months if the company issues a profit upgrade, if the company is performing better than what the management and the prospectus has stated. Anyway, a fascinating looking chart, probably not a lot of liquidity based off the candlesticks, particularly the start. When it started trading, this is sort of let's just see how spread out the candlesticks are, jumping from one day to the next. That is a byproduct of illiquidity, and the liquidity of this company has improved over the past few months, possibly. And now this company has a market cap of $11.8 billion. So why am I talking about this company? So I'm pretty sure this company released something. This might have been over 2 weeks ago, if I remember correctly. I remember this company released something after trading had finished for the day. Yes, they released their quarter 3 results on the 10th of November at 4:24 p.m. The 10th of November would have been Friday 2 weeks ago, and I did my last weekly wrap-up video on that date, and I started recording about 3:10 p.m. So actually 4:10 p.m. Australian Eastern Daylight Time. So I would have missed these results. I did go through these results. I won't go through it now. Everything looks like it's moving in the right direction for this company. According to TradingView, the price earnings ratio is 62.6. So you do have to pay for the potential growth of this company. But it does seem like the market likes this company. Let's have a look at the NASDAQ chart. Just want to see what the chart, this nice looking chart since about this time last year. Share price in an uptrend. Is a share price at an all-time high at $87. Oh, look at that. Share price has reached its old highs back in October of 2021. So this could be an area of resistance for Light and Wonder on the NASDAQ. So this company is moving in the right direction just based off the chart, but a lot of volatility. You can see share price has moved up and down in big waves. So that's one thing to keep your mind on when it comes to this company. I'm pretty sure this company's in iGaming and gaming, that sort of thing. Next company is TPG. And this company released a negative announcement 2 weeks ago. TPG Telecom, maybe I'll just zoom in a little bit. There we go. TPG Telecom ceases discussions with Vocus Group, and the market didn't like that. Share price on that particular day, the 13th of November, share price dropped, what was it, 11.7%. Market didn't like it. Leading up to that particular announcement, there's no real reason to be holding this company unless you're massively bullish about the future of TPG. I am not massively bullish about this company. In fact, when you look at the weekly chart, from when I forget why, this company has been listed for a long time, but for some reason, you don't see or not able to see the full history of this company's trading on the ASX. But we don't need to see the full history because since June 2020, share price has fallen a fair bit. In fact, share price has gone from about $9.70 to $4.67. So not good news for TPG. Obviously, they wanted to continue discussions with Vocus Group. So more than likely, they were buying something from Vocus Group, or Vocus Group was buying something with TPG. Oh, next company is APM, which is APM Human Services International. They had a shocking day last week. Share price dropped 20.7% on the 10th of November and then dropped a further 12.5% on the 13th of November. And it's really interesting because I actually had put this company onto my watch list for a potential breakout, because just before this would have been the AGM, and we can confirm that. Let's have a look at why the share price dropped. So the 10th, APM Chair and CEO address at 12:49 p.m. So obviously the market didn't like something. In fact, if we look at the 5-minute chart, more than likely, we are able to see exactly when that address started on the 10th. Was it the 10th, if I remember correctly? So let's have a look at the 5-minute chart. Yes, look at that. Share price up until 12 p.m. Share price going sideways at 12 p.m. So that must have been when the CEO started talking, or the announcement actually was released. It would have been released at 11:45. Let's have a look. So, 12:49. Okay, yeah. The reason why there's a time difference is I'm in Brisbane. We don't have daylight saving, so 12 o'clock, according to TradingView, is actually 1 o'clock Australian Eastern Daylight Time, and that means the announcement was released at 12:49 p.m. When a price-sensitive or market-sensitive announcement is released, the shares of that company are halted. The trading is halted for about 10 to 15 minutes. I forget exactly what. So obviously the market had 10 minutes to digest this particular announcement. They didn't like what they saw, and the share price just dived and kept on dropping. So if you're fully aware and came back after reading that particular announcement and you're very bearish, and you could have sold out at $2.15, and the current share price is $1.46. So sometimes it does pay to pay attention of announcements being released. But if we look at the chart go back to the daily chart, I had put this company onto my watch list simply because it did look like possibly there was trying to get a shift in sentiment. But just before this massive decrease in share price, the share price of APM was struggling to get above $2.22, which was really interesting because if you go back through time, you can see this horizontal dashed line was a resistance zone or resistance price for this coder. Because if we go back to June of this year, the share price really struggled to get above $2.22. So I was just waiting for the share price to break above that on strength. Doesn't mean necessarily I'd buy shares in this company, but it did look like potentially sentiment was shifting, and then that sentiment or that potential shift in sentiment was completely destroyed by that particular announcement, and the share price has dropped a lot. I wouldn't necessarily say this is a good quality company simply because of the margins, massive amount of profit. So in 2023, two massive amounts of revenue, $2 billion of revenue, but only $100 million of income. So their profit margins are really low. So this company is sort of in recruitment, human relations, human resources, something like that. Provision of health and human services. Yeah, I'm pretty sure it's sort of recruitment and that sort of thing. A company I actually do own, and that's Catapult. And share price has been a little bit volatile, but share price has been or was in a downtrend. You can see a beautiful downtrend. And when I say beautiful, I'm just talking about well-defined, obvious downtrend. And that started around about October 2021 and really came to an end in May 2023. So about an 18-month downtrend in the share price. And a lot of people who think technical analysis is rubbish, and the reason they think it's rubbish is because they believe you can't time the bottoms and the tops, or you can't time the market. And I agree with that. You can't time the market perfectly. But technical analysis is not about absolutely timing the bottom of the market. If you're absolutely perfect timing the bottom of Catapult, you would have bought on the 30th of March at 60 cents. I did not buy at 60 cents. I'm just waiting for a shift in sentiment. At a share price of 60 cents, there's on that date, and if you just go like this, so we can cut out when it's started going up. There's no end in sight to the downtrend in this company. You need some evidence the downtrend has come to an end, or is coming to an end, or there's been a shift in sentiment. At that point in time, you had no way of knowing, absolutely no way of knowing. So it's almost impossible to absolutely time the market. And that's what a lot of anti-technical analysis people just don't understand. They think technical analysis people or chartists are trying to time or absolutely perfectly time the market. It's not happening. Anyway, Catapult did release some results. On, trying to remember the date, the 14th of November, first half results. And just based off, this was the 14th of November, and based off the reaction of the market, share price on that day rose 15%. So obviously the market liked it. The only problem I had with the reaction from the market, you can see share price rallied back up to, we'll say around $1.10. But if you look back in time, the share price was at these levels, or has been at these levels during the past 6 months or so. So there is a little bit of resistance at these levels. And that's why I think the share price hasn't gone to rally, because all those shareholders who bought at higher prices want to sell out because they consider this company a dog stock because the share price fell. In fact, consider this. If you bought shares in Catapult, say on the 31st of July, you might have bought shares at $1.20. And then you saw the share price drop down to below 90 cents. So share price dropped by about 30%. So you consider this company to be a dog stock and you want to get out. And when you see the share price rising, you see the opportunity to sell out. And there's a lot of that happening. And that's why there is resistance at these levels. So I'm always looking for at least a 6-month high. But I'm not trading Catapult. Catapult's in my longer term, we'll say in my medium term portfolio, just because of the future of this company. They are a leading, what they're doing, they're a leader in what they are doing. I've heard the name Catapult on sports podcasts that are focused on in America or overseas. They have no Australian influence whatsoever. I've actually heard the word Catapult being mentioned in regards to athletes training, that sort of thing. So the name is actually out there and it is, quite well known. That's one of the reasons I'm holding it, just because of the potential future. And one of the reasons I've been sort of negative about Catapult is just the management. And I'm hoping management have seen the potential of the company, and I'm just hoping they can lead the company in the right direction. I'm still a little bit nervous about that, but I think they are on the right trajectory right now. Nufarm, one of these agricultural companies, obviously released something. Full-year results. So a lot of these companies, and we are seeing a lot of full-year and half-year results being released in November. So the majority of half-year, full-year results are released in August and February, but there is an out-of-cycle release of results in May and November. So we are at the second sort of peak right now. So Nufarm released their results, and this was interesting. And this just shows you the power of resistance. And the reason why, when I'm looking for a breakout, I want at least a 6-month high, because Nufarm did release their results and the market initially liked it. Share price rose 8.1% on the day on pretty good volume, and the share price really struggled to stay at those levels. And the reason why was simply because when the share price did rise on that day to $4.80, it was like maybe a 1-month high. That's it. And look where the share price has been in the past year. Share price has been significantly higher than $4.80. So all these shareholders who bought at share price higher than $4.80 saw the share price rise on that day, and they thought, oh, now might be the time where I can sell. So as soon as share price rallied on that day, there was increased supply of shares on the market. At least the demand on that day met that supply, but over the following few days, the share price fell. And the reason share price fell from $4.80 to $4.60 is not because the results were not good or the market was wrong on that day. It's simply because of the increase in supply of shares on the market, because all those shareholders who bought at higher prices. It's the mindset of a lot of investors right now. I keep saying this over and over again. The majority of investors out there have this idea that when they buy shares in the company, share price has to rise immediately. If the share price falls, it's a dog stock, they made a mistake and they have to get out. A very short-term mindset, but that is the reality we are living in right now. Maybe it's always been like that, but it's definitely true right now. Karoon, a company I've been following quite closely because you just see the share price broke above a nice little resistance area at $2.40. Share price was moving up, price of oil was moving up. So I did put this on my watch list. I almost took a position in this company. And in fact, I've almost taken 2 positions in this company. The last time was on the 17th of November when they released what I'm going to talk about. I almost bought shares at $2.05. And share price hasn't gone up that much, $2.12. So won't say it's a mistake not buying shares just yet. But anyway, Karoon did a capital raising. And this was really interesting. I remember this capital raising now, because on the day, so this announcement of this capital raising, they went to a trading halt at 11:09 a.m. Actually, no, 10:29 a.m. The shares were paused, and then they went to trading halt at 11:09 a.m. So shares were traded in this company for about 30 minutes on the 15th of November. Let's have a look at the 5-minute chart for Karoon. Let's look at what happened before 10:29 a.m. So the share price absolutely collapsed before the company went into trading halt to announce or making a massive acquisition, pretty big acquisition, and they'll do a capital raising. Share price took a massive tumble. because the news of capital raising was already out there in the media. I'm not sure who is it to blame, whether it's Karoon Energy, maybe the investment banker who's doing the capital raising, or ASX, but someone screwed up. The news of this capital raising and this acquisition got out before the company's shares were halted. Massive mistake by someone out there, and someone should be held accountable. I don't know who, but someone should be. Anyway, the share price took a massive dive because of this capital raising. I'm pretty sure the capital raising was done at $2.05. I could be mistaken. Let's have a look. Which one is it? Look at this one. I have a feeling it's $2.05. I could be mistaken, but let's have a look. $2.05. I just hate how you have to look for it. How much they're raising. I'm probably going to go straight past it. Equity, here we go. Equity raising, $2.05. Yes. And that's one of the reasons I was thinking of taking a position in this company at $2.05. Now, there's a couple of things that are holding me back. The first thing holding me back was the size of this acquisition. It's a massive acquisition. And research has shown that the majority of acquisitions this big don't work out well for shareholders in the long run. That's one thing that held me back. But I did like the acquisition. They are diversifying. So this company drills oil in the oceans off Brazil. And this acquisition was for a part ownership in some Gulf of Mexico oil fields or whatever. But the chart looks pretty bad, but a nice little rally after the company announced the capital raising. Share price got as low, for some reason, as low as $1.96. Well, I don't know why anyone would be selling at about 9 cents below the capital raising price, and the share price rallied. I just wish I was here on that day, the Friday. I probably was out at that point in time to take advantage of the share price being below $2. I just wish. Sometimes I wish I was paying attention. Now on to AMP. Now, the AMP share price fell a lot the other day, and I don't know why, because I don't follow AMP at all, but I did notice the share price dropped like a ton. So on the 16th, they announced AMP to launch new digital bank designed for small business, and there was an investor update, AMP Bank. So more than likely, this new digital bank designed for small business was not the reason why the share price collapsed. More than likely, it was this investor update. In fact, in section 5, it says financial implications. That does not sound pretty good. So more than likely, there was some negative financial news from the company, which is not surprising that AMP would release that. No impacts on cost guidance, blah, blah, blah. I don't know. So something in here the market didn't like. So let's have a look at the share price. On that particular day, share price dropped 15.8%. And the share price went sideways. Nice little rally today. Share price increased 5.9%, but share price has absolutely collapsed. And there was no reason to be holding AMP shares leading up to this bad announcement, because look at what the share price did. Now, you could say loose lips. Someone knew about this beforehand, but it's happened before. Share price has just dived. Let's have a look at the weekly chart for AMP. And why would you be holding this company? Just look at the chart. This company just keeps on disappointing year after year. This is like the opposite of what you want to see in a company you own for the long term. Share price has gone from the top left to the bottom right. You want to see the share price go from the bottom left to the top right. And the share price, in fact, share price has reached an all-time low. Yep, share price has reached an all-time low for AMP. I still hear people say, oh, AMP looks cheap. Well, it's been looking cheap for the past 10 years. Although there's no price earnings ratio, no dividend yield. What if that's true for AMP? Anyway, I have no interest in AMP. It has, unless they give me proof of a turnaround, and there's no proof at this point in time. National Tyre and Diagnostics. Now, this is an interesting one because I had this company on my watch list. They released a really good announcement a few months ago. On the 20th of September, distribution of Dunlop tyres in Australia and New Zealand. The market loved it. Share price on that day, let's have a look at the trade history, 20th of September. Share price on that day rose 21.8% on pretty big volume. And then on the 20th, no, here we go. And then on the 16th of November, Goodyear announces Dunlop strategic review. So obviously, well, not obviously, because I haven't shown you the chart. and this was not good news. I forget exactly what this happened. Announced that its subsidiary has entered into agreements with Goodyear, blah, blah, blah. Goodyear has announced that following a comprehensive assessment of all assets, Goodyear has determined to actively pursue strategic alternatives for the Dunlop brand, and that the sale of the intellectual property conferring ownership of the Dunlop brand is one of the strategic alternatives that will be pursued, which puts that initial announcement in doubt now. And what was the reaction from the market? Let's have a look. Have a look at the daily chart, not the weekly chart. So you can see on the 20th of September, the initial announcement, massive rise in share price on that day. Nice little pullback. And I was like thinking, oh, this could be a nice little play. National Tyre and Will. And then on this particular day, 16th of November, share price of National Tyre and Diagnostics fell 16.1% and has been quite volatile since then. In fact, the share price has fallen below where it was, well, sort of below where it opened on the day of that initial announcement on the 20th of September. So anyway, market cap of this company, $100 million. Price earnings ratio, 30.99. And yeah, I've no real big opinion of this company. And the main reason why is because look at that. Share price of this company can be massively volatile. Share price in about a year, or say year and a half, share price moved from about 20 cents to a high of $1.62 and then fell to 50 cents. So a roller coaster ride for National Tyre and Will shareholders. OFX Group released some financial results, I believe, or in trading update, I forget what. I've traded this company before, yeah. First half results on the 14th of November. I actually did have a look at these results, and I didn't think they were all that bad. So let's have a look. So underlying EBITDA, actually they are bad. Maybe I was wrong. Statutory NPAT only up 4.9%, a few negatives here. Underlying NPAT down 15.9%, net cash held down 0.1%, turnover down 3.5%. Okay, I was wrong. I thought that results were actually quite good, but I was wrong. Must have been another company. So let's have a look at the chart. And the main, I think I had this company on my watch list because they released a positive announcement on the 23rd of May. So that would have been the full-year results. And the share price started to go up, but the share price, the trend or the uptrend in the share price failed, and the share price moved back into a downtrend. And the share price is around $1.37, which is the price at the last low, which was in April. So the share price right now is at a really important support level. The last lows we saw, if the share price falls below $1.37, that will be quite negative. And you can just see the share price, it's just hovered around that level for about 6 or 7 trading days. On the day they released their results, share price fell 10.5%. And the low on that day was $1.33, but the share price bounced up and closed at $1.37, right on that support level. And the share price has remained above $1.37 since then. So technicals do work. Resistance levels do work, support levels do work, because it's all about psychology of the investor. There would be investors out there who know that the low in OFX Group back in April was about $1.37, and they see the share price at $1.37 and went, and they go, whoa, share price is back at those levels after this nice run up, and they just think to themselves, well, maybe the share price will get back up to $2.20 like it did between April and July of this year. So there is a little bit of buying coming in at these levels. Accent Group, I was going to do a standalone video on Accent Group, but then Appen decided to do a capital raising, so I either postponed or maybe even cancelled it because I'm mentioning Accent Group in this. Now, one of the reasons why I was going to do a standalone video on Accent Group is just the potential of this company being good value right now because of a sharp decrease in share price, because the company released a trading update at the AGM on the 17th. And to be honest with you, the trading update wasn't positive. It wasn't overly negative either. So sales up 2.1%. I prefer to look at like-for-like sales are only down 2%, which is not as bad as some other retail companies. And one of the things that interests me about footwear, so this company owns a lot of footwear brands and that sort of thing. One of the things I've been grappling with, and I should do some research on this, is how discretionary footwear is. I would think one of the things that people would tend not to buy when they are hard up for cash is footwear. They'll try to maintain their current footwear for as long as possible. So I was thinking that could be quite negative for Accent Group, but the decrease in sales, like-for-like sales, wasn't down all that much, only 2%. And this company is opening more and more stores. So I was thinking with the PE ratio of this company, I believe, is at 12, 11.3 now, dividend yield 9.9. I want to do some research on whether this company is good value at these levels. It has been as low as $1.52 recently. That was in June, and as low as, almost $1.15 back in June of 2022 when there was overall negative sentiment in the market. But that's the research I was going to do in Accent Group. Share price did flounder on that day, down 8.5%. I have heard some experts say they were surprised by the market reaction, but I am never surprised by the market reaction because overall, the market is smarter than I am. The market knows more than I am. So there is a reason why the market reacted like this. You should never dismiss how the market reacts to announcement. Now, the market can try to fool you, and I'll show some of those cases later in the video. But on this day, there was no fooling. The market didn't like this trading update, and the share price actually has kept on falling and has now gone to $1.73.5. But possibly good value right now. The way to look at this is simply, can this company increase their profits over the next 5 years or even 10 years? And I think the answer to that is more than likely yes, they can improve or increase their profits. So buying at a PE ratio of 11.3, now the profits might fall next year or this year, maybe even though might be a little bit lower in financial year 25. But in the next 5 to 10 years, I think there's a good chance the profits of this company will be higher than they are now, which means if you look at the forward-looking PE ratio, it could be an attractive company. So that's the research I was going to do, but I've decided to postpone that research, and maybe I'll have a look at this company a little bit in more depth over the next few days. Another retail company that released a trading update was Universal Stores. Now, there wasn't much of a reaction from this company. I think initially there was a positive reaction. Another trading update. So let's compare Accent Group. So remember, overall sales up 2%, like-for-like sales down 2%. Now, the reaction for the market was positive for Universal Stores. So sales up 14.7%. They don't have a like-for-like sales. So maybe they didn't. Here we go. So first 20 weeks sales performance. Total retail sales up 2.6% versus previous corresponding period. Oh, that's year-to-date October financial year 24. They sort of have two different numbers here. So 14.7% in this first section. But the first 20 weeks sales performance. Total retail channel sales plus 2.6% versus previous corresponding period. Like-for-like sales down 6.4%, which was a bigger down or bigger negative number than Accent Group. But the market liked this, and this is another company that is rolling out new stores, which is why the total sales are much higher than like-for-like. And that's the way to get bigger, is to roll out more and more sales, even if like-for-like sales are going down. Lovisa is another company. I'm not sure if I'll be featuring Lovisa in today's video. Yes, I am. Lovisa is another one that is rolling a massive amount of stores throughout the world, which is one of the reasons why I like that company. Anyway, so, the reaction from the market. So on the day, the share price rose 3.3%. But you can see, when you just look at the chart, share price doing nothing for Universal Store. Price earnings ratio, 10.99, dividend yield 6.3%. So fairly similar to Accent Group when you think about it. So Accent Group has a high dividend yield and a slightly higher PE ratio, but all these retail companies are looking or potentially looking quite cheap. The only thing we have to be wary of is if we go to a major recession and the spending comes way back, some of these companies' share price might fall significant further from here or significant amount from here, and that's the time to get really interested in these companies. Peninsula Energy is a company I've owned before, and then I didn't own it. And this company announced a capital raising, a $60 million capital raising. I believe the share price was 11 cents. I could be wrong. I'm going to check it now. 12 cents the day before they announced this capital raising. And I forget what the price it was. was like 7 cents, something like that. 7.5 cents. I did put in a bid at 7.7 cents to buy some shares in Peninsula. It was not hit. And it was 7.7 cents. It was just after trading had begun for the company. Share price fell significantly on the day. Share price at currently 9.2. Nice rebound from the market. Let's have a look at the share price performance of Peninsula. This is where it gets really interesting. So 5-minute chart. So on open, the share price of this company opened at 7.6 cents. If I put my bid in on open, my bid would have been hit. I would have been very happy. But I put it in a little bit later, and the share price was at 8 cents. So I put in at 7.7 cents, hoping the share price will fall back. And for a bit, it didn't. The share price has kept on rising. So I missed out buying some Peninsula shares by a little bit. So I wouldn't say this is a high quality, or I wouldn't. How would I categorize Peninsula Energy? They're in the right area. They're in Wyoming, in the United States. I don't think they have a massive deposit or anything like that. But the valuation of this company is quite low. But if you look at the net present value of their project, they hope to get into production. It's actually quite low, really low, in fact. They might have it in their presentation. Let's have a look. Let's see if they've got in their presentation. They probably don't. Let's have a look. Have a very quick look. Potential to become largest US producer of uranium. Potential. Yeah, bloody talking about uranium prices, project, NPV somewhere here. Net present value. This is remaining capital expenditure. All-in costs. Here we go. Net present value. Project revenue 988 million. Net present value 116 million US dollars. Yeah, so not much. I probably would like that to be a little bit more. Project forecast to become cash flow positive within first year production 2025. So still at least 1 year away from production. So I'm spent a little bit more time, too much time on Peninsula Energy because I've still got a fair few companies to get through. Next company is Avita Medical. Avita Medical released, what did they release? Sort of a profit downgrade. So on the 21st of November, the company said or released Avita Medical updates full year 2023 guidance. When I saw that, I thought that sounded positive. It wasn't. It was not positive, if I remember correctly. So before this upgrade, the commercial revenue was going to be between 51 and 53. Now it's 49.5 to 50.5. So a slight decrease in expected revenue, and the market didn't like it at all. Share price nosedived, if that's the right word, by about 10%, 9.4%. And you can just see this chart. The chart of this company is just wild. And I think the market's just having a hard time valuing this company. Right now, market cap is 400 million. So sometimes I really like the potential of this company. Sometimes I think the market's getting a little bit too ahead of itself. And if I saw the share price get to, say, $1, I probably would take a position in Avita Medical, but I don't think the share price will get to those levels anyway. Another company, I'm a little bit surprised with the market reaction. Remember, I say you should not be surprised, but I was a little bit surprised by this one, so I'm sort of contradicting myself here. There was an announcement from SG Fleet, confirmation of this transaction, and AGM outlook. Now, it's the only not much in this particular announcement, if to be honest with you, but for some reason, the market found something not to like. And the share price on that day dropped 11.7%. This is after, was it Macmillan Shakespeare released a positive announcement? So a lot of people were thinking these companies, these novated leasing companies like SG Fleet, Macmillan Shakespeare, Smart Group, Fleet Partners, they're all going to benefit from electric vehicles because you can get some really good tax concessions if you get an electric vehicle through novated leasing. But for some reason, the market didn't like the announcement from this company. And to be honest with you, the chart looks pretty negative, not overly negative, but share price not doing much at all with SG Fleet, a company I have owned in the past. And to be honest with you, this company does look sort of cheap at these levels. PE ratio of 10.6 and dividend yield of 7. So I could see you get a capital return buying these prices and maintain a pretty good dividend moving forward for SG Fleet if the company can grow and take advantage of the EV revolution. Webjet released their results the other day, and I thought they were good. And then I saw the share price had dropped 3%. I was like, what's going on here? I thought they were really good. I won't show you the results. You can have a look at them themselves. But remember, I told you the market can fool you. And I think with Webjet, this is an example of the market initially fooling investors. Let's have a look at the 5-minute chart for Webjet. You can see it. When the company released their results, the share price dived, took a massive dive. And this is in the first 15 minutes. Share price actually dropped in that first 15 minutes from $6.72 to $6.30. And then share price did a V-shaped recovery and kept on climbing. So for some reason, and more than likely, it was retail investors selling out en masse in that first 15 minutes. They didn't like what they saw, and possibly it was just fear because the share price was dropping. They thought, oh, the results are good, and then they saw the share price dropping. They frightened retail investors into selling, and then the institutions came in and started gobbling it up. Shares up. So my initial impression was that results for Webjet were quite good. And then I saw the share price down 3% in that first 15 minutes. I was like, oh, that's interesting. And I should have gone with my first impressions. Maybe I should have bought some shares. And then you look at the daily chart. You can see on that 1-day candlestick, a massive shadow below the main body. Pretty big volume coming in the last 2 days as well. Now, the share price was in a nice little uptrend, but really the share price is not in an uptrend right now. Now, a company I do own, Playside Studios, gave me and gave shareholders a nice little upgrade. And I'm pretty sure the upgrade is in the Chairman and CEO AGM addresses. This is not a profit upgrade. This is just a revenue upgrade. It's actually in the first line here. There it is, the second paragraph of the title page. Upgrade in the company's financial year 24 revenue from 50 to 55 million, now to 55 to 60 million. So this is a revenue upgrade, not my favorite type of upgrade, which is a profit upgrade. I love profit upgrades, but it seems like the market loved this announcement because the share price has gone on a rally, a 2-day rally. Share price increased about 12% on the Wednesday and a further 5% on the Thursday. I don't consider this to be a breakout though. The reason I don't consider this to be a breakout because of what happened in August. So late July, August, you can see the share price went on a nice little rally up to a high of about 59 cents and then fell back. If the share price of Playside didn't go on this rally, if the share price just sort of went meagerly higher during that period, I probably would consider this to be a breakout because if we didn't see the share price reach these levels, the last time the share price was at 54 cents, was back in February, early February of this year. So we are talking about a 10-month high. And that's what I'm looking at for breakouts. Now, you might say and argue, so not many shareholders bought at these prices between 54 and 58 cents back in late July. So there's not much resistance, but there's still a little bit of resistance. So don't be surprised to see share price pull back or go sideways from here. But possibly the sentiment in this company is starting to shift. And if the company can release another upgrade, particularly if it's a profit upgrade, maybe they say we are now profitable or that sort of thing, maybe this is a start for some good times in regards to this company, Playside Studios. It's not cheap, in my opinion, almost $200 million markup. So you do have to pay for the potential. And that's why I'm holding Playside Studios, is just the potential of this company. Irrigated Research had their AGM, and share price, the market has responded positively to this. I saw nothing to get excited, nothing to be concerned about. I am trading this, and I do have a longer-term position in Integrated Research because I think if this company can turn things around, this is dirt cheap. This company is dirt cheap. The markup of Integrated Research, 50 million, just about 50 million. But when you look at their results, just compare their results to the markup of this company. And the market is pricing in this company going under and bankrupt. But this company is generating cash flow, is profitable. So the market expects this company to fail from here. And I think that's a low chance right now. And I'm playing the turnaround story. I got a little bit too excited not that long ago. The share price looked like it was turning around, so he decided to put in a trading position. That was sort of a false break. We've seen that a couple of times, back in January and then again in August. But nice little reaction from the market after this particular AGM. But again, let's have a look at the 5-minute chart. You don't absolutely see it here, but in the first 10 minutes of trading after the AGM, and then they released the announcement, the share price dropped to 28 cents. So again, more than likely that was one retail investor saw the announcement or the presentation, whatever they saw, they didn't like it, and they jumped on market, sent the share price down to 28 cents, and you can see a nice recovery in the share price. The share price got as high as 36 cents today. You can just imagine that one shareholder who sold out at 28 cents saw the share price get to 36 cents today and went, what did I do? Why did I make a mistake? And that's one thing you should never have is regrets in regards to your decisions. Just learn from any wrong decisions or mistakes you make. That is my philosophy when it comes to investing. Don't dwell on your mistakes. Learn from your mistakes. Anyway, when you do look at this chart, it's actually not a good looking chart at all. Share price is still in a downtrend, but I think there might be value. That's the only reason I'm holding it. It's not based off the chart. It's just based off valuations right now. And I think if this company puts out one good announcement, the turnaround is definitely happening. Share price is just going to take off because of those valuations. KME, I'm going to include KME simply because, and I saw this in a Twitter, I was going to say Twitter, saw this in a tweet, and this particular tweet had, they had something to say, and what they said in this particular tweet was absolutely, I think it was a good thing what they said. That this person's tweet was in regards to these key financial year 23 key financials on this side right here. So revenue, EBITDA, and NPAT, and it is misleading. So it's not to scale. That's the problem. So this revenue, EBITDA, NPAT are not to scale, nowhere near to scale. So look at the revenue. If you just look at the blue area, the graph, and just ignore the numbers, you would say the revenue took a massive jump. It more than doubled in financial year 23, but it only went from 24.6 million to 26.8 million. Look at the EBITDA. You'd say, oh, EBITDA has doubled in the past year. It went from 6.2 million to 6.7 million. And then look at NPAT. You'd say, oh, NPAT has doubled in the past year. It was flat. It went up by $46,000. And that was the essence of that particular tweet. This is misleading. These are definitely misleading. But to be honest with you, if any shareholder or any investor is fooled by these particular graphs, I think they deserve to be fooled. If they made a decision just because it looked like it's gone up or doubled in the past year, I think, they've made a mistake, and hopefully they would learn from that. But it is misleading, but I don't absolutely care about that. Individual investors should know better. Anyway, Lovisa. Let's talk about Lovisa, since I am a shareholder of this company, and they also released an AGM and a trading update. The other thing that's really important about AGMs, I think I've mentioned this maybe once or twice, is a lot of companies will release trading updates during the AGM. And that's why I do actually like November, just because of AGMs. The rest of AGMs I can ignore, but any time a company releases a trading update at the AGM, I have to pay attention. That's why I'm going through all these AGMs. Now, sometimes they'll release a trading update announcement separate from the rest of the AGM, but sometimes they put the trading update in the main bulk of the AGM. But at least Lovisa put in the AGM trading update separate announcement. So we can see how this company has performed. And again, just like many other retail companies, sales are down 6.2%, but total sales up 17% because they are opening up massive amount of stores. They say it here, through the first 20 weeks, 35 net new stores opened up, 55 net new stores and 20 closures. So that's the reason why total sales are up, even though like-for-like sales are down. And this is another instance where the market tricked us, or tried to trick us, the investors. So let's have a look at the 5-minute chart. You'll be able to see what I mean. I think it's this one, yeah. So the share price opened down, significantly down, about 4% after they released the AGM. And look what the share price has done after that. Share price has gone on a rally. And again, there's an old saying, that amateurs or retail investors open the market, the professionals or institutions close the market. You see this a lot when the retail investors or the amateurs overreact on open. Sometimes they don't overreact, they get it right, but a lot of times they overreact. And Lovisa is another case where the retail investors, the openers, absolutely got it wrong. Anyway, so I'm a long-term holder of this company. And the main reason I hold Lovisa, now you would say this company is overvalued compared to its peers, but there is a reason why it's overvalued. P ratio about 30, dividend yield 5.2%. And the main reason is because this is a global company, a global retail company, and they are opening stores en masse around the world. So the potential of this company is absolutely massive. A lot of the other retail companies in Australia just playing in Australia. So JB Hi-Fi, which is another retail company I own, they only have stores in Australia and New Zealand. Harvey Norman do have stores around the world, but mostly in Australia. And a lot of these other retail companies, Australia. Lovisa have a worldwide plan. At this point in time, they are succeeding what they are doing. A company I don't struggle with, but Avada Group, a recent IPO, maybe 2 years ago. Let's have a look. Listed, IPO'd December 2021. So this company had the AGM and also a trading update. Well, the trading update was the 31st of October. Now, the thing I'm trying to understand about this company is the market cap is 48.4 million. And then you look at some of the financials of this company. So let's have a look at, the, no, there we go. So I just actually did have a look at the presentation. I know this company is not sexy at all. It is like a not monitoring, it's a traffic control company. They have those people with the lollipop thingies, the people holding the stop signs, what they're called. Anyway, so this company has a lot of revenue, but I see if they've got the numbers here. So revenue of 183 million, EBITDA 16.1 million, but this company has a market cap of 48 million. So this company is trading at 3 times EBITDA, and you might say this company is really cheap. They also expect some pretty good growth in financial year 24. And this company has been experiencing pretty good growth over the last few years. So it's gone from 117 million to 183 million. EBITDA has gone from 11.5 million to 16.2 million. They have traffic controllers. That's probably the word I should be using. Traffic controllers has gone from 1,413 to 2,138. I just don't see. Margins are low. Gross margins 21%. I just don't see the massive growth in the future unless they keep doing acquisitions. I think pretty sure this company does quite a few acquisitions, but the thing that I'm grappling with when it comes to this company is just the valuation. It just seems like a company with a valuation of 48 million producing those sort of numbers does seem pretty cheap. And then I had a look at the chart and I went, oh, maybe a double bottom has been reached. Now, liquidly traded, share price got down to a low of 50 cents on the 1st of May and hit 50 cents again in early October. Nice little bounce. So 50 cents possibly is a nice bottom. Well, a double bottom has been reached at 50 cents, but valuation, it's an unusual company in terms of what they do, but maybe a unique company on the ASX and valuation grounds. I could see maybe some investors getting excited about this company just because it does look cheap. But just because it does look cheap doesn't necessarily mean it's a buy. Fortnightly Medical. This company's been releasing so many good announcements recently. Let's have a look at the market-sensitive announcements it has released in the past week and a half. So 13th of November, US CMS approves reimbursement. A presentation on the same day. 20th of November, Fortnightly Medical receives USA FDA clearance for CTLVAS. And the 22nd of November, Fortnightly Medical signs SaaS contracts to expand into Detroit and Memphis. And we have seen a bit of reaction from the market. So this could be a company that is going places, a nice reaction. So the initial really good reaction from the market was on the 13th of November. The share price rallied 70.65%. Which announcement was that? 13th of November. Yeah, US approves reimbursement for Fortnightly Medical. Okay. And the share price has been quite volatile since then. Share price went on a massive run back in April. You can see that massive run. Share price increasing 63% on one day and another 48% 2 days later. Share price went to a high of $1.28. Then the company did a capital raising. Share price fell back all the way down to 46 cents, and share price is going on a rally. Massive volume coming in as well. So this is definitely a company to keep an eye on. Doesn't have much revenue, if much. I'm pretty sure they do have a little bit of revenue, but not a lot. So definitely a company to keep an eye on. Market cap is $232 million at this point in time. So I have this on a few of my watch lists, and particularly I have a watch list called Everyday. So that makes me look at some companies every single day. Not a lot, but this is one company that is on that everyday watch list. I just want to see what's happening with this company every single day. Chart, and if the company releases any announcements that I don't actually see. EBOS Group, not really a company I would follow all that closely. The company did release a market update. This market update actually sounded quite positive. This is, so it sounded positive. So they actually said that it was a pleasing start to the financial year. So revenue up, EBITDA up. So again, this company lost a Chemist Warehouse contract. So they did normalize, excluding the contract. So we can see how they're going without that contract, and everything was up. So it seems like the management liked the way they were heading, but the market didn't like it. Look at that. Share price has nosedived the last 2 trading days, down 5.4% on the day and down a further 2.1% on the Thursday. And the share price is still a little bit above a nice little support level, which is at about $32. ABA is a bank I don't know much about, Auswide Bank. They released a trading update on the 22nd, which is the Wednesday, and there was some interesting wording in this. I didn't really go into too much depth. So market conditions have been challenging with elevated funding costs following unprecedented increases in interest rates and intense competition in the home lending market. This has led to a material short-term fall in margins, blah, blah, blah. So the economy is not good for these small banks, these, what do you call them, regional banks. The bigger banks are doing okay, but these regional banks are having problems. There's a lot of tailwinds or headwinds for these regional banks. So ABA, which is not one of the regional banks I'm following too closely, it looks ugly. Look at the chart. Ugly looking chart. Share price fell 3.5% on that day, another 1.4% today. And if you look at the weekly chart, last time the share price was this low was way back in 2020, around the time of the COVID-19 financial panic. Share price has been as high as $7.20. So share price has not quite halved, but not good times to be a regional bank owner right now. They have a lot of headwinds. Praemium, a company I've held in the past. They did an AGM, or had an AGM the other day, chairman and CEO address. Now, I had a look at this, and the only thing I could find why the share price reacted the way it did, and there was a massive drop in the share price. Let's have a look at the chart first, I suppose. Here's the Praemium's chart. Look at the daily chart. So Praemium share price dropped 35.3% and dropped another 2.7% today, down to 36.5 cents. The last time share price was this low for Praemium was probably, around about, again, early 2020, around the COVID-19 financial panic. Share price has been as high as $1.62, and share price has dropped by about 75 to 80%. So I was trying to find why the market reacted like it did. I had really hard time finding it, apart from there was one bit of guidance here or trading update. I'm going to have a hard time finding it now. Here we are. So first half 24 underlying EBITDA expected to be approximately 20% lower than corresponding prior half year EBITDA. That's the only thing I could find why the market decided this was not good for Praemium, and the share price dropped 35%. And it's really interesting because I actually mentioned in the paragraph a little bit above, current initiatives expected to material uplift in the EBITDA, yet the expected EBITDA to be significantly down this particular half year. So maybe they're talking about after this half year, EBITDA will have a material uplift because of some of the current initiatives. So maybe this is a time to think about Praemium Limited, down 75% from its highs back in late 2021. Markup about just below 300 million. Price earnings ratio 12.5. Still got a fair few to go. Healius did a capital raising. So share price rallied 5.3%. They did a capital raising. And I want to talk about the capital raising. So where is it? So what price is a capital raising? Yeah, well, they said it straight away, almost straight away. Capital raising price. Tell me what the capital raising price is. Probably gone straight past it. I can't see it. Here we go. It's way $1.20. So which was a big discount, say 30% discount to the previous share price, which was $1.83. So a pretty big drop in share price. So we saw the market absolutely punish Healius because of this particular announcement or this capital raising, and the share price dropped 24% on the day. And look at this chart. It's an ugly, ugly looking chart. Share prices dropped from $5 to $1.29. That $5 was in December 2021. I'm pretty sure Healius is, what do you call it? A pathology. They do, what do you call it? The things where you put your thing in your mouth, that sort of thing. Testing kits, that sort of thing. Testing, like COVID testing, that sort of thing. So there's Healius, Australian Clinical Labs, Sonic Healthcare, I think. I could be mistaken. So it's understandable why this company has suffered over the past, this is the weekly chart. But even if you look at the daily chart, share price has been in a downtrend for a while. And look at that drop in share price from July. I'm pretty sure there was a takeover bid for this company from Australian Clinical Labs. Yeah, they're still possibly moving forward. I don't know. I don't really follow these companies all too closely. Takeover for Healius Limited, Australian Clinical Labs. So if you know more about this takeover bid, I'd love to hear from you. So leave that in the comment section of this video. But the chart looks absolutely negative. Look at that. Ugly. This is the classic downtrend. No reason to be buying Healius right now because of this downtrend. Technology One released their results. The results were good, in my opinion. I'm a shareholder of Technology One now, and the results were good. They beat expectations. The outlook looks pretty good. So, in fact, they say it in highlights. Profit before tax up 16%, beating guidance, which was expected. Profit was expected to increase between 10 and 15%. So typically, if results beat guidance, the share price should rally. That's exactly what happened initially. So let's go back to the 5-minute chart for Technology One. You can see it. In that first 5 minutes of trading, share price rallied up 2%, and then the share price dropped. So this is reverse of those other companies I showed you, which were they? There was Webjet. There might have been another one. I can't remember. Where the share price initially fell on open. This is the complete opposite. Share price rallied on open and the share price has fallen. I'm not sure why the market found something negative in the results, because they beat expectations. So there must have been something the market didn't like. But again, I'm a shareholder of this company now, even though I do think it's a little bit overvalued, but I've been thinking this company's overvalued for a long time. So what I did with Technology One is I took a small position in this company. So when I say small position, I mean small position, maybe $2,000 worth. And then if the share price keeps on rising, that's okay. But if I see significant weakness in the share price and the price earnings ratio gets to the point where I'm willing to add to my position, I'm going to do that. So buy on any weakness. Now, for some reason, there was a lot of selling came in during today's trading. So massive volume came in at 2:20 p.m. Did the company release anything? No, it could have been just a fund manager selling on market. Massive volume coming in over a 15-minute period, and then the share price rallied after the selling had come to an end. Share price that was as low as $15.10. I think a fund manager just dumped on market. They didn't care at all, and it was over a 10-minute period. In fact, let's have a look at the 1 minute chart. You'll probably be able to see that a little bit more closely. Yeah, in 1 minute, the share price dropped 3.5%, probably even more than that. Would have been about 5% in 1 minute on massive volume, a massive dump. Yeah, this would have to be, could only be a large shareholder who just decided to sell for some reason and just dumped on market. I would never dump on market if I had a large holding. It's just silly. It's silly. You don't get maximum returns or maximum amount of money if you just dump on market, because they sold shares at $15.10. If they were patient, they could have been selling at $16. That's a big amount of money they just left on the table by just dumping on market. That's my advice to any big fund managers: never dump on market. I'm pretty sure most of them don't, although probably most of them don't have control of what they're doing. Clover Corporation is a company I've owned in the past, don't anymore. They did release, they have their presentation, and I'll have a look at the market announcement. So that was today, Thursday, and you can see share price fell 4.3%. A couple of things to say about this. Now, the weakness, so this company is reliant on China and people having babies in China. In fact, they talked about this weakness, or this lack of, the significant drop in the birth rate in China has negatively affected the company. In fact, they talk about it in this trading update a fair bit. So probably over-reliant on China right now, Clover Corporation. Now, one of the reasons why I have started following, or did, even though I have been a shareholder in the past, I saw the share price weakness. Share price going sideways from September last year all the way through to July this year. So share price going sideways for about 9 months. So consolidating. And what you want to do when share price is consolidating like this is wait for a breakout to the upside or to the downside. For Clover Corporation, this was a false break back in February. And unfortunately for Clover, the break was to the downside. So the market saw something they didn't like. More than likely, there was no announcement. And the share price kept on dropping. So I put this onto my watch list in case the market and the share price got to levels where I would find it attractive. But the share price kept on falling, moved into a downtrend, and it seems like the market was aware that Clover Corporation was going to release a negative market announcement, and hell, it did. Now, a nice bounce in the share price today for Clover Corp. We'll look at the 15-minute chart because not as actively traded. Share price today got as low as 71 cents. And that was in the first, actually, look at the 5-minute chart. You can't really see because there's not a lot of trading for this company. Share price did drop to 71 cents in the first 30 minutes of trading, and a nice little bounce. So maybe the bottom has been reached for Clover Corporation. Doesn't seem like there was a lot of volume. Oh, there was a bit of volume. But you can see this one-day candlestick. This is actually a fairly bullish one-day candlestick. You can see there's a very long tail to the bottom of the main body of the candlestick, and that is just telling us there was buying coming in during the day. Although I don't think there's not a lot of volume, so wouldn't look too much into that, and the share price could fall a little bit further from here. Now onto a positive announcement. Another company I've owned in the past for a short period, a very small company, Ambertech. Market cap of this company is $20 million. This company is profitable, and they also have a dividend, 7.1% dividend yield. So leading distributor of audio-visual solutions for all types of installation projects in Australia and New Zealand. So let's have a look at the announcement. And the share price rallied 17.1%. So obviously, whatever they released today was positive. And it was positive. I saw it, I went, ooh, the share price is going to rally. So let's have a look at the trading update. They also had an AGM today. So again, a lot of companies released trading updates at the AGM. Ambertech is not alone. And this was positive. I liked it. I thought, oh, maybe I should be owning this company again. So revenue, a nice increase from last year, from $40 million to between 47 and 50 million. EBITDA, or EBIT, from 1.5 to 2.8 to 3.4 million. And profit from 700,000 to between 1.5 and 1.9 million. This is the first half of the year, not full year. This is just one half. So remember, the market cap of this company is 20 million. If you just analyze that profit, we're talking about a PE ratio of 3 on the bottom end, and possibly as high as, or as low, a PE ratio of 8 on the high end, and possibly as low as maybe 5 if they get to the top of that profit range, and they can replicate it in the second half. They also talk about some sort of contract, I believe. Was it in this? For some reason, I can just remember them talking about a contract. Maybe it was in the presentation. I can't remember. Anyway, so Ambertech. So the only problem with Ambertech, if you just look at this chart, share price was in a downtrend and the share price rallied nicely on this stage. Some nice volume coming in, but you can see my problem with this particular chart, and the reaction from today is a share price is now in a resistance zone, and share price has been significantly higher in the past year. So a lot of resistance moving forward. This is why I like to see share price at least a 6-month high, preferably a 1-year high. Let's have a look at the weekly chart for Ambertech. So I bought in Ambertech. See this nice rise here in October 2020. Share price in 1 week rose 150%, and I bought then and then sold out somewhere here. So a nice profit for Ambertech, but yeah, maybe just valuations. This is a nice company to keep an eye on. If you think it's undervalued, maybe it is undervalued. Anyway, the whole point of me doing these videos is to share ideas with you. This may not be the company for me at this point in time, but maybe one viewer will like what they have heard. This company has might have profits of $4 million in the financial year, and the market cap of the company is $20 million. That sounds cheap, particularly if they are able to replicate that performance in following years. I've got it. Which one will I finish with? Scali or Appen? So I did a standalone video on Appen. Company is doing a capital raising at a massive discount. I think it was a 42% discount. Capital raising is at 55 cents. And I mentioned in that video, I will not be surprised to see the share price go as low as 50 cents. That would be really negative if the share price falls below the capital raising price. Share price closed at 60 cents today, so still a little bit above the capital raising price, but not a shock to see the share price of Appen fall 36.84%. According to TradingView, the market cap of this company, well, it's not 149 million because share price fell 36%. But if you look at the market cap based off the shares right now, not including the capital raising, the market cap of this company is now below $100 million. Now, if you do include the shares that would be added to the registry via this capital raising, more than likely the market cap of this company will still be around about 150 million. And you might say and argue that's still way too high for this company that is dying. You could argue that, and I would probably listen to you. This could be a dying company. We could be watching a company dying in front of our eyes. And let's finish with Scali, a company I do own, a high-quality company. Share price dropped 6.7% today. And in fact, there was some buying coming in. Share price was as low as $10.40 and closed at $10.84. The reason why Scali decreased was not because of a trading update. It was simply because the managing director decided to sell some shares. What's his name? Anthony Scali or something like that? Yeah, Anthony Scali sold 4.6 million shares. Still has 6.4 million shares. This is a fairly large holding. So he still has 7.95% of shares on issue. The market doesn't like, particularly retail investors, don't like when the managing director and the CEO, and not sure if he's the founder or maybe the son of the founder, can't remember. They don't like it when they sell shares. Now, the one thing I would say is research has been done on this, particularly the long-term share price movement of the company after a director has sold like this. There is no correlation between financial performance of the company and a director, CEO, founder selling. There's no correlation. Just because they sell doesn't mean they know something we don't know, doesn't mean the company will underperform in the future. In fact, there are examples out there of managing directors, CEOs selling at exactly the wrong time. And the classic case or example was the Blackmore guy. Was it Maurice Blackmore? Something like that. Maurice, I'm trying to think of the other name. Selling Blackmore shares back 6 or 7 years ago. In fact, I'm going to bring up Blackmore. Oh, Blackmore's been taken out, haven't they? Oh, damn it. We can't have a look. They're no longer trading, are they? Yeah, they've been taken out. So I forget how long ago. It was about 7 or 8 years ago. Shares of Blackmore were trading at $20 at the time. He sold a fair few shares to buy a yacht. I can't remember if the shares fell because of that. And this has been used as a prime example that sometimes They just don't know about the potential of the company, because particularly when it comes to share price, the share price of Blackmore's then rallied from $20 to $200 in maybe a year or two. So he missed a 10-bagger just because he wanted to buy a new yacht. So sometimes they just don't know. And the best way to look at it is this. Directors, CEOs sell for many reasons. Sometimes they will sell simply because of taxation reasons, and they have to sell unless they want to pay the taxation man or the tax man out of their own wallet. And a lot of times they'll just sell some shares to pay the tax man. Sometimes they will mention that. I love it when they give reasonings for why they're selling, but they will sell for a number of reasons. There are many reasons why they sell their shares, but there is research done that there is much better signal when they're buying shares. That is a better signal than when they're selling shares. So definitely when CEOs and directors, that sort of thing, management are buying shares, particularly if they're all buying shares at the same time, that's actually a good sign that, the only reason they buy shares is because they expect the valuation of the company to increase in the future. Now, there is a reason, and there is one time when a director selling is a bad sign, and that is when they're all selling at the same time. We have seen this, and research has shown this. When they are selling, all directors or the management are selling at the same time, that is actually a signal, particularly if it's a large amount. We saw this with A2 Milk about 3 years ago, if I remember correctly. All directors sold out at the same time, and it was a fairly large amount of shares when the share price of A2 Milk was nearly at the high, and they knew at that point in time that A2 Milk was heading into some really significant headwinds. I think it was about 1 month before the company released their first negative trading update. So keep your eye on that. When all the directors or a fair few of the directors or management sell at the same time, particularly if it's a large amount, that is a signal. If one CEO, one founder sells a large amount of shares at one point in time, that's not a signal. Research has shown this. I have done my own research on this very matter. Anyway, so it's just an overreaction from the market. Market doesn't like, particularly retail investors, doesn't like the CEO or the founder or whatever are selling shares on issue, selling shares on market, that sort of thing. I'm not sure if they did sell on market. Let's have a look at, I think, Scali. You better see this in the course of sales more than likely. It's probably at open. There it goes. There it is at open. Sold at $11. So, yeah, he's like, yeah, the share price has fallen below $11 now. S3 XT. XT is cross trade. I forget what S3 means, maybe before trading. So he got $50.6 million. $50.6 million. What do you think he wants to do with that $50.6 million? He could be thinking about retirement. That's maybe all he's thinking about, buying a nice house, maybe buying a yacht for his retirement. I have a feeling he's like 61 years old. Anyway, I'm starting to ramble on now, so that's a sign for me to sign off. Time is 5:35 p.m. local time. I've been talking for way too long. So if you have any questions about any companies I mentioned in today's video, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.